Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormis Fatakia. Good morning, Hormis. Well, we ended flat last week, but Friday was a decent session for the markets. Today, it's been volatile, so to say. We did see some fall from the highs, and again we saw some recoup. Nifty opened above that 24,800 mark. Right now, we are below that, but yes, still there are gains of around 50 points on the Nifty. It's autos all the way, metals which are supporting the index as well. And of course, we'll discuss all of that in greater detail as well, especially metals being the big story that we have today. And Nifty Auto, of course, because of the GST cut, and that has been passed on as well to the consumers. That continues to be in focus. So it's the consumption theme that's working out for the street right now. What's not doing so well? It's the Nifty IT space continues to be a big fall there. And we also have the banking names. So those names are not doing so well right now. So it's a market where there are pockets which are doing extremely well, but the others not supporting it so much. And a lot of individual names that we have on our radar as well. So let's go across to that. Hormis is here with us to put the spotlight on top movers in the market. Hormis, tell us more.
It may be a cautious start to the new trading week, but there are some stocks that are actually throwing caution to the wind, and Shalby is one of them. We're seeing some follow-up buying after the 11% surge that was witnessed in Friday's session. It's up 7% in today's session as well. Now, Friday's gain was the biggest single-day gain that the stock has seen since May of 21, and already in the first couple of hours of the trading session, we've already had more than 30 lakh shares being traded compared to a 20-day average of just 31,000 shares. Now, Friday's volumes of 1.5 crore was the highest that the stock had seen on record, and courtesy of this two-day move that the stock has seen, the stock is now finally nearing its IPO price of 248. The stock had listed back in 2017. There is, of course, no stopping MobiKwik as well. The stock ended higher last week, continues to move higher today as well. 11% higher now on the stock, has gained 48% now in the last 6 trading sessions, and it's up in 5 out of the last 6 of them. And the commonality in all 6 trading sessions has been the fact that the volumes every single day have been in excess of 1 crore shares. Now, even today, we've already seen 1.5 crore shares change hands compared to the 20-day average of close to 39 lakh shares. Now, stock with this 30-odd% surge that it had seen last week has now gone above its IPO price, which was around 278 rupees. Auto and auto ancillaries have been the theme since the Prime Minister's address on the 15th of August. So steel strips wheels is one such name. This stock is also up in 6 out of the last 7 trading sessions. Volumes over 7.5 lakh shares have changed hands today compared to a 20-day average of just close to 60,000 shares. And as a result of today's surge, the stock has broken above its 50 and its 100-day moving average, both of which are placed at levels of 233. But unfortunately, the returns over the last 2 years have been zero, because the stock is up 23% this year, was down 23% last year as well. So status quo being restored here. Orient Technologies, the last one on the list, the stock has snapped a 2-day losing streak today. Now almost 3.5 lakh shares changing hands in this 7% up move so far, and the 20-day average too is just around 40,000 shares. Now it is at a very important level, because the 50-day moving average is exactly at 324, which is where the stock currently trades at. But the stock has been a big underperformer after its listing in August of last year. From a post-listing high of 674, the stock has already halved from those levels. So some stocks that are moving within the broader markets, even as the markets continue to remain in cautious mode.
All right, some interesting names there. Thank you so much for joining us, Hormis, with all that with that list. And you mentioned auto ancillaries. The entire auto space has been in focus. So let's get it, Sudarshan. He has some update on Samvardhan Motherson. Sudarshan, what's the update here?
So it's been all about auto in the last, say, 15 days after PM Modi spoke about GST reforms on 15th of August. And since then, auto index is up 11%, and all the auto stocks are higher as well. But today, one stock is higher, and it has its own reason. That is Samvardhana Motherson. Over the weekend, company has announced or unveiled its plan for FY30, giving the gross revenue target of $108 billion. That is up more than 4 times from FY25's revenue revenue of $25.7 billion. Also, company is saying that it's going to deliver 40% consolidated ROCE versus 18% that it has seen in FY25. And one important statement that company has made, and it's important considering recent news related to tariff, it's saying that no single country or company will contribute more than 75% to its incremental revenue that it would see over FY30. And also it will maintain dividend payout in the ratio of 40%. Now, after recent listing, not recent listing, the last one, in the last 1 year, one listing that we had seen from Motherson Group, that was Motherson Wiring. Now companies saying that more listing can be done over the next few years, and talking about the impact of tariff, companies saying that there is no material impact.
All right, so that's about Samvardhan Motherson. No impact because of US tariffs. That's also been one of the bigger risks for the stock and the industry. But thank you so much, Sudarshan, for making sense of what's happening in this particular stock. Let me talk about the realty space because there's a lot of action happening there as well. Let's start with Sunteck Realty because there is some investment that has come by. There has been an issue of 1.17 crore warrants, which are convertible into equity shares amounting to around 500 crore rupees. And the issue price here is 425 rupees a share. Now, remember, the company says that it will be allotted to promoter and promoter group. They will be subscribing around 66.5% of this overall issue. So anytime promoters are subscribing, that increases confidence for any investor as well. And other investors include NT Asian Fund, there's Utpal Sheth, and also Mukul Agrawal. So that stock is taking note of that, higher 3% in trade as we speak. Max Estates also in focus. We had spoken to them last week. They spoke about their plans of adding more portfolio. This time around, they have secured developmental rights for a 7.25-acre land parcel. And this is a group housing project which has a development potential of 1.3 million square feet. The total development potential is over 3,000 crore rupees. Now, remember, all of this is in Gurugram. And the company says the outlay will be around 534 crore rupees for this particular transaction that they have. And this adds to the launch pipeline that they have. More than 17,000 crore rupees is what they were looking at. And they're quite confident of achieving that mark as well. So, Street taking note of that. These two realty names on our radar today, Hormus.
Indeed. And Sunteck Realty, of course, there were some interesting data points that had emerged in that Friday's move that the stock had seen. Almost 65 lakh shares that traded hands. That was the highest volume that the stock had seen since January of 2025. So building on to those gains of Friday is Sunteck Realty, 461 on the stock. And by the way, the Nifty continues to remain below 24,800. 45 points higher on the index. Take a short break. On the other side, we put the spotlight on the crypto market. Manisha Gupta joins us on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and still almost 50 points higher on the index. Some movers then. Prime focus, of course, remains in a 10% circuit. TBO Tech, we just heard from the management a few minutes earlier. That also now 9% higher on that stock as well. Precision Camshafts has made a move higher now, 8% on that stock as well. Shalby, of course, we spoke about that just a few minutes earlier as well. Now, on the losing side, though, Apollo Micro is seeing some bit of profit booking, and considering the fact that the stock has risen almost 85 to 90% in the last 5 weeks. So some profit booking coming in here, 6% lower on that stock. Paradeep Phosphates too, trading around 5% lower there as well. Amber Enterprises made an announcement earlier this morning regarding the fundraise that its subsidiary has done, its electronics business. That stock is now at the lowest point of the day. 4% lower on that stock as well. A couple of order wins that had come in. Vikram Solar just announced an order win earlier in the day. That stock is now up 9%. It's a recent listing, of course. It continues to build on to those gains. Now 351 on Vikram Solar as well. So these are some of the broader market movers. Of course, we just spoke of MobiKwik as well. Now that stock is up 12% as we speak. GMDC continues to move higher, was up 25 to 30% last week and is up another 6% in today's trading session as well. Of course, there are some other names as well within the broader markets that are doing well for themselves. Nesco is one such name, 6.5% higher on that stock. And Adani Power has made a move towards the upside among the top gainers on the Nifty 500. 5.75% higher there on Adani Power as well. 644 now on the stock at the highest point of the day. And some of the others, of course, we spoke of Samvardhana Motherson. Keynes Technologies is up around 4% as well. So the entire auto and related space is, of course, doing well. Ashok Leyland is up 4.5%. Bharat Forge is doing well for itself. There's some specialty chemical names that are making a mark today. Aarti Industries is up 3% as well. As promised, shifting focus to the crypto space, and Manisha is here with more on that. Manisha, what do you have for us today?
Well, on Crypto Corner, we're going to be talking about on how various countries are looking at crypto as an asset class and the regulations therein. Well, let me remind you and start with US, because this is where we've seen lead coming in when it comes to regulation. Instead of being a case-to-case basis, there's a national structure on cryptos being devised here. We already have seen the Genius Act being signed into a law, and we do understand that there are a couple of them still being worked upon, like the Clarity and the CBDC Surveillance Act. So that is something that the US markets are looking at this point in time in sense of clarity there. Apart from that, we are also looking at ETFs, which are now being traded, and we are looking at record volumes coming in for ETFs as well. So when it comes to US, it is a big bang that we've seen come in sense of friendly regulations, in sense of crypto as an asset class. Talk about Canada, and we are looking at regulations being worked quite strongly here as well. The crypto investment firms are classified as money service businesses, and they also are taxed accordingly. The digital asset are taxed like commodities, and here as well you have crypto ETFs which are traded quite strongly. Actually, some of the ETFs which are not launched in US are actually launched in Canada and trading well. Next on my list is the UK, where the UK also has began regulating crypto as an asset class since 2020. A lot of their rules actually seem to be coming in a sense in 2026. Here as well, a broader regulatory framework is in development. And as I said, the implementation is expected by 2026. Switzerland should come in on your screens. And here as well, we're looking at regulatory approach quite strongly considered. It is structured quite strongly as well. And the crypto holdings are subject to income tax and wealth taxes. Take a look at El Salvador, and this is where the history was created in 2021. This was the first country which declared Bitcoin as a legal tender. So buying, holding, selling, purchasing goods and services is what El Salvador does. Apart from that, when you look at the taxes part of it, it is exempted for foreign investors on income earned from Bitcoin transactions. So clearly very friendly when it comes to El Salvador. Singapore, in the meanwhile, licenses crypto exchanges and custodial wallets providers under Payment Services Act enacted in 2019. European Union also has done leaps and bounds when it comes to regulatory in case of crypto, adopted the first unified crypto regulation, the markets in crypto assets, in 2023. For EU as well, the framework emphasizes investor protection, financial stability, and cross-border regulatory consistency. Japan, in the meanwhile, also seems to be taking a step ahead in 2025. It's preparing to launch the first yen-pegged stablecoin. It's working quite strongly on that. And this is expected to reshape and how Japan is approaching the global markets in sense of payment systems. China as well has had a love and hate relationship when it comes to crypto, but China is also exploring now a privately issued yuan stablecoin. It already has a digital yuan existing. Hong Kong, in the meanwhile, is introducing stablecoin regulation. It did that on 1st of August and is expected to bring more framework and more structured framework going forward when it comes to many of these cryptos there. And then take a look at Pakistan, and much of the developments have come in this year when it comes to crypto. Pakistan has established a crypto council, a new regulatory body for cryptocurrencies, and this council already has said that they will be acquiring a Bitcoin reserve there. And then you have Bhutan as well, where visitors now can use cryptocurrencies to buy, sell goods and services, and can pay nearly all aspects of their journey in Bhutan as an economy there. Bhutan also is one of the most crypto-accessible destinations in the world at this point in time. And the final country on my chart is India, where we still are awaiting a national structure, a draft policy, and a discussion paper as well. But in the meanwhile, you have cryptos, which are classified as a virtual digital asset. This is under Section 224A. Cryptos also are taxable at a flat rate of 30%, regardless of your period of holding. And then, of course, there's 1% TDS as well. Well, with that, let's go for a short break. When we come back, we'll talk more markets and news on the other side.
CNBC-TV18.
Welcome back. You're still tuned into Trading Hour, and the big exclusive. Finance Minister spoke to Network 18's Rahul Joshi on the recent spike in bond yields. FM said bond yields becoming unsustainably high will have a bearing on both central and state government borrowings. Finance Minister also said RBI has started to diversify from US government securities. Listen in.
Nirmalaji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes, I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
Yes.
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely
Of course,
fine.
yeah.
Exclusive conversation there with the finance minister. On to corporate conversations then. SIS has recently acquired AP Securitas Private Limited. Now, let's get the management of SIS and we'll take this conversation forward based on three important points. The first one, of course, being the synergies that the management sees from this acquisition. Now, whether this AP Securities acquisition will be a margin accretive one, and will the company up their mid-teens growth guidance for FY26? Now, these are the three important talking points where we base our conversation on. Dheeraj Singh, who is the CEO at SIS, joins in now to take this conversation forward. Dheeraj, good morning. Thank you for joining in. If you tell us more about this acquisition, first up, that you have made of AP Securities. How does that help you as a company in terms of synergies? And is this margin accretive to you immediately as it takes effect? Tell us more on that.
So this is a landmark acquisition for us. It is the largest security deal in India and for us also. AP Securitas is a 40-year-old company, currently run rating at about 110 crores per month, which adds to our SIS monthly run rate of about 1,200 crores. So combined now, we are run rating annualized basis of more than 15,000 crore, which had been our guidance, and hopefully this should be the largest incremental growth year ever.
Yes, I'm sorry, Mr. Singh, you said 15,000 crore rupees.
Yes, combined now we should be crossing this year in more than 15,000 crore.
You made revenues of 3,500 crore rupees last year. That number that you said was for the revenues?
Last year we made about 13,000 crore revenue.
Okay. All right, my bad. Yes, that's the quarterly number that I was talking about. I wanted to understand the margins overall for this acquisition. What would your margins look like once the consolidated picture comes in place?
So the deal is margin accretive, EPS accretive, and ROCE accretive. We have evaluated on that basis. Combined, we should expect a consolidation of about more than 50 crores EBITDA consolidation. And in terms of the EBITDA percentage margin, it should remain about the same. And in years following, that should increase further.
So what are the current margins for the acquired entity, if you can give us that particular number?
So the margins for this business is about, it should add about 50 crores or plus in terms of EBITDA. And We expect with the synergies that we have with the combined entity in terms of both the back-end side as well as on the client side, this will increase further in the years to come.
50 crores of EBITDA every month, Mr. Singh?
No, on a yearly basis.
On a yearly basis, okay. And what does this now do to your growth guidance for the year? You still maintain that mid-teens growth guidance that you had earlier projected?
Yes, we've been projecting 15% plus, and we are confident of that, probably a little higher for this year.
And since you say that this is margin accretive, do you believe that this 4.5% margins that you've been reporting over the last, say, 4 to 5 quarters, does that go into the high single digits, say, maybe if not this year, then maybe next year?
We are confident that we will achieve a 5.5-6% EBITDA margin for the group in a year's time. And this equation will work towards that also.
Mr. Singh, I wanted to understand, you said it will help you gain market share. What is the current market share that you have already? What kind of growth are you seeing, say, in 2 to 3 years for your own company?
So India market share for our security business is about 7 to 8% for the organized market. Typically, a market leader would have about 15 to 20% market share. So there's still a lot of room to play. And this particular equation will help us because AP Securitas is the number 6 in the industry for security industry. We are clearly the number 1. Now with the combined entity, our India business itself will be twice the size of our nearest competitor in security. Our India business will also become more than 10,000 crore, just the India business. I'm not talking about the international, and will contribute more than 75% EBITDA for the group. So it consolidates with our strategy. The AP Securitas is also very strong on the northern side of the market, which will help us to consolidate and achieve the density benefits for the northern market. They bring a lot of experience and skills in the e-surveillance market, which will combine with our alarms e-surveillance business. So there are many other synergies that we will work upon as the next 2-3 years.
Mr. Singh, two-part question here. You, in the press release, says it's an interim consideration of 73.5 crore rupees. Will there be more consideration which you will be paying? Plus, is it a profit-making company? Because for a revenues of around 1,100 crore rupees, 75 crore rupees seems like a good deal that you have maintained this time.
Yes, our deal criteria are very rigorous, and we believe we have a good win-win deal. We work on tranche basis, so it's a ratchet structure. We have acquired a majority as of now, and there'll be an earn-out over the next 3 years. And we hope the business does much better for the promoters to get a much better payout later.
So what are the contours of this deal? 73.5 crore rupees now. Will you have to pay more once there are certain targets received? Also, is this entity that you have acquired profit-making already?
Yes, it is a profit-making entity, and that is why it is both EBITDA accretive and EPS accretive, as well as ROCE accretive. But we have taken only a 51% stake as of now. The balance will be paid out in the final tranche after 3 years' time, and that will be based on the EBITDA that they achieve at that particular point of time. So it's a ratchet structure that they will be paid upon.
How much will you be paying as the balance, Mr. Singh, in 3 years' time?
Because it's a ratchet structure, there's no guarantee for the payment that they'll get in 3 years' time. It's linked by a formula to the EBITDA growth that they achieve. But it can be anywhere in the range of 200-300 crores to give you an estimate.
So you are saying from 50 crores currently that they have on an annual EBITDA levels, if they achieve 200 to 300 crore rupees, is when you'll have to pay more money to the company for the acquisition that you've made. Am I understanding that correct?
No, if they are growing at about 20% CAGR on the EBITDA, so if their 50 crores EBITDA grows to about 80 crores EBITDA, then you'll be paying them a multiple based on the EBITDA at that point of time, adjusted for, of course, the net debt at that point of time.
Okay, how much more will you have to pay, Mr. Singh, if that number is achieved?
Yes, if the numbers are achieved, then it can be anywhere between 200 to 300 crores in terms of equity payout.
And how much cash that you have in your books?
The current payout is all through the internal accruals and the NCDs that we've already raised. So our net debt equity EBITDA ratio is changing very minor from 0.7 to 0.9. And at that point of time, after 3 years, we will look at how to pay them out.
Okay, so there's not enough cash in the books to make the payment for the future for now.
Yeah, that's 3 years later. But as for the current tranche, we have enough cash in the books, and it'll be generated through internal accruals.
Right. So basically, as of now, for this tranche, you will not be raising any debt. But in case in future, if the need arises, your debt to equity goes up to 0.9 from 0.7 is what you mentioned, right?
Correct. Yes.
Right. So, and just one final question, Mr. Singh, what about your international business? Has that stabilized? Because the last time you spoke to us, you had mentioned that the government grants for the Singapore business were not received and that dented your international business. Has that come through? Part one and part two being the SIS Prosegur IPO approval that you had received from the regulator. When do we see that hitting the bourses?
Coming on the second part, the SIS Prosegur Cash, the IPO. We've got the approval, as I mentioned the last time, and we have a time frame window of about 12 months' time. So we expect to be listed hopefully before the April-May of next year.
All right, yeah, go ahead.
National business, yes. The margins are something that we are working upon. The revenues are strong and robust, one of the best revenue years, but the margins is where we are working upon.
Okay, all right. So we have a lot more questions. We're out of time today, Mr. Singh, but thank you so much for joining us and explaining the rationale of the investment or the acquisition that you've made. More importantly, they have to pay out more in case the acquired company achieves certain threshold as well in terms of EBITDA. For now, we'll move on and get in Nagraj Shetty from HDFC Securities for a quick technical check on the markets. Nagraj, good morning. Thank you so much for joining in. Can you quickly tell us the important levels to watch out for on the Nifty and individual names as well?
Hi, good afternoon. Market has been consolidating after a small uptrend from the lower levels. I think the overall trend remains positive. We have seen some good base building around 24,400 levels. From here onwards, market Nifty is likely to move towards the important resistance of around 25,000 to 25,100 levels in the next few sessions. And as far as stocks are concerned, I'm on a bullish on a railway stock, particularly IRFC. IRFC, we have seen some tremendous decline from the higher levels. Recently, it made an important bottom reversal around 118 and moved up from there on. Currently showing an attempt of bounce back and attempt of upside breakout of the cluster resistance around 125 levels. I think one should go long from here onwards, and immediate upside target would be around 132. One can place a stop loss at 120. Second one is from Tanla platforms. Chartically, it has been in a gradual up move recently, and we have seen some a longer consolidation movement. This stock has repeatedly tested the hurdle of around 665 odd levels and currently placed at that level. I'm expecting decisive upside breakout of 665 levels in the next few sessions, and one can place look to buy at this point of time. Immediate target would be around 700. One can place a stop loss at 640.
Nagraj, thank you for sparing time joining us today with your views on the index and on specific stocks as well. Take a short break. On the other side, put the spotlight on the big story of the day on the metal space in our special segment. Stay tuned. We'll be right back.
Welcome back. You're still tuned into Trading Hour, and this is our big story, metal index that's been surging now. Nigel is here to tell us more. Nigel, tell us what's happening overall. Why are metal stocks in focus?
Well, I'll give you 5 big reasons, Sonal, and that's the same reason that I said last week as well. And from there on, we have seen a continued up move in terms of metal stocks. So sentiment globally seems to be changing. One is the street is bracing, or the globe is bracing for Fed rate cuts. Now, when Fed cuts rates, it normally stimulates the economies, and that's why, in fact, there is hope on that front. And now, it's a very, very high probability that in September we'll see a Fed rate cut. And Fed rate cuts are good for base metal prices. Point number 1. Point number 2. China's anti-involution drive, that's gaining momentum. What is that? They're restricting the supply of metals, steel, base metals in the markets because, otherwise they're self-destructing. So they're slowing down the pace of production, and it's very, very evident if you look at the year-to-date steel production as well as lower. And they're saying by the end of this year, there'll be further capacity cuts. So that's good news. However, keep an eye out on exports because exports continue to remain elevated. That is the steel exports that I'm talking about. So that's point number 2. Point number 3, China seems to be on the recovery mode because both their manufacturing PMI, their services PMI that came out last week, that was better than what the street was working with. Point number 4, let's look inward. The DGTR, they have recommended protection for the steel sector for the next 3 years. It will be 11 to around 12%. So there is some protection. And point number 5, suddenly there's bonhomie between India as well as China. So that as well is giving a bit of a sentiment boost. So these are the top 5 reasons that metals have been buzzing.
5 important reasons why the metals are doing well. Most of the stocks are also doing well, but there is one that isn't, and that is Vedanta. Why is that so, Nigel?
Well, Vedanta always does something different, right? You don't know what the promoter entity is going to do next, and that's the reason why it's not been getting the valuations. Now, the problem this time around is they're being a little bit ambitious according to what the street has, the way the street is looking at it, because source-based information that our colleague Ritu is picking up is that they could be in the forefront to grab Jaiprakash Associates assets for around 17,000 crores. Though you need to keep in mind, this is not a done deal and it will be done in a staggered manner. So, it's not a done deal as of now. But if it's a deal going in that direction, then the street doesn't like it. And I'll tell you why. Nuvama has put out a few points. They consider this event as a negative for minority shareholders, point number 1. They are unconvinced with the rationale. The assets could be good. There could be some kind of dilution or some kind of sale of non-core assets, in the coming months and years if it goes through. But they're not convinced with the rationale. Point number 3 is they're saying it's an unrelated business. The priority should be in deleveraging. Why are you doing this? Point number 4, they're saying in the demerged entity, the Vedanta Limited is likely to pick up this particular asset, which will be a cumulative of 17,000 crores. And they're not sure about, how exactly they will fund it. They see some kind of challenges in terms of funding it in Vedanta Limited, in the demerged entity. And point number 5, they say that the culmination of the transaction will restrict any kind of re-rating. Remember, metals are going to do well. Then Vedanta is the play that you get exposure across various metals. But Nuvama, because of that, they are not too impressed with this transaction if indeed it goes through.
Okay, all right. So that's about Vedanta. But, even Morgan Stanley has come out with a note on the steel makers. Nigel, what's the note suggesting?
Well, they've gone ahead. They've upgraded JSW Steel, Tata Steel, as well as SAIL. On JSPL, they maintain their equal weight and the target price is 1,150. Now, they have put out a few data points. They are turning constructive on the steel spreads expansion. So that's point number 1. The other point that they're saying is they're expecting domestic steel prices to recover from year on because demand will improve. And normally post the monsoon, you see a couple of price hikes that come about. They're also pointing out the other point that we made, that China's anti-involution theme, that's gaining traction. And besides that, they're saying that global factors are turning positive. So because of all of this, they've gone ahead and they've raised their steel price estimates for the next couple of years by around 3%. And that's why they expect the ferrous pack steel stocks to outperform over the next few months. So that's the tale with regard to the big story of today. You have metals that are buzzing on a whole host of factors. Vedanta is not performing, and steel, Morgan Stanley seems to have upgraded all of those stocks. Back to you.
All right. Interesting take there. Thank you so much, Nigel, for explaining to us. Metal's a big mover today, and that explains the reason why. But we have to talk about the F&O space now. Sudarshan is joining us now, bringing us the latest trends. Sudarshan.
So while market remains higher, Nifty is up above 24,800, but it's yet to, we can't say that we are out of danger zone, and the culprits remain IT index, which is top losing index currently, and also to an extent Nifty Bank, because at one point was in the red, but it's back in the green, but remains around flat line. And now, especially talking about Nifty Bank, if you take a look at in the last 7 sessions, it has been flat, and just it has been seeing selling on every rise. So support remains around 53,560. That was the last week low, and resistance is around 20-day moving average. That is the 54,840. What does volatility index indicate? So it's up 1%, so not indicating much. It's a similar thing about put call ratio. It's at 1 versus 0.89. But now take a look at the Nifty. Put options 24,800. Premium at 49 versus Fridays of 100. 24,700. Premium at 21 versus 56. Now call options 24,850. Premium has been flat. 24,900. Premium has seen a just minor increase. So it tells you one thing. Whether, even if market is higher, it's expected to be in a range that we have been seeing for the last few sessions. So support for Nifty remains around 20-day moving average of 24,707, and resistance is at 50-day moving average, that is 24,960. I've taken 3 stocks. First one is Bharat Forge, that is seeing short covering, and 2 stocks that have been seeing fresh longs, and those are Mahindra & Mahindra and Keynes Technologies.
Interesting. Sudarshan, thank you for that update. Of course, the texture is what has been over the last week or so, being a sell on every rally, be it on the Nifty or be it on the Nifty Bank as well. And the Nifty Bank continues to remain that pain point for the markets along with IT. Take a short break. On the other side, we discuss market fundamentals with Nikunj Doshi from Bay Capital, who joins us on the other side. Stay tuned. Welcome back. Continuing our conversation on the markets then with Nikunj Doshi of Bay Capital. Nikunj, very good morning. Thank you for sparing time and joining us today. You know, you've mentioned in your note about some of the holdings that you have in your portfolios. A name that intrigued me was Car Trade Technologies. Now, among it was at one point for a better part of last year, was one of the worst performing new age IPOs. Just 1600 rupee IPO price falling to almost 300. Now it's well above 2500. What has triggered this turnaround, part one, and where do you find more value now going forward, considering the fact that it has a lot of subsidiaries as well, so value unlocking prospects and so on and so forth?
So, frankly speaking, first of all, thank you for having me on CNBC. Card trade, I would first like to brief as a team what we have been doing for last several years is that we have focused on several pre-IPO transactions. And card trade was one of the transactions that we had looked pre-IPO also. And when it got priced, we believed that pricing was slightly on the aggressive side. So we didn't participate. And after the IPO also, we waited for it to correct. And when we bought that time, price was around 500 rupees and market cap was around 2200 rupees. They had 1100 odd crores of cash on the books. We obviously looked at it on the fundamental side and then took a call on the company, because auto industry as a class, as an industry, was passing through tough times, and most of the dealers as well as OEMs were focusing more on the getting, I would say, eyeballs or perhaps the customers to buy in for their brands. Car trade as a classified platform, they had a much better business model wherein if you serve, you do not have to give your number, but when you are interested in buying of a vehicle, then you have to give your number. So that gives a concrete kind of lead to the dealers as well as I would say OEMs also come to know about this. So it's a very, I would say, kind of very good business model they have. Secondly, the trigger came in when they bought OLX. So I think they got it very at attractive valuations. And OLX also had two kinds of business, B2B and B2C. B2B was making losses, and there it was working capital intensive as well. So they shut down, after acquiring OLX, they shut down the B2B business and they focus only on B2C. And that has been like doing very well for them. Even first 2 months number they have reported, and again there also they have reported good growth in OLX India. So I think as a business, it was doing well. but valuation was not right at the time of the IPO. Now the fundamentals have changed, and what we are seeing is the price, which is again reflecting the good fundamentals of the company.
Already up 80% this year. The other one that you have is Ixigo, which is Lert Revenues Technology. The stock has been buzzing since its Q1 numbers. Do you think that uptick will continue for this particular name? Do you think it's already priced in the growth that you're talking about?
See, again, digital business is one thing means again, as a firm, as I said, Ixigo was a pre-IPO investment for our firm. And digital business is like we have been tracking, and digital business is the main trigger, I would say, is that when a J curve kicks in, that's the time when you see profitability shooting through the roof. And most of these businesses initially have to spend on client acquisition. So when you look at the initial numbers, you don't see that profitability on their books. But once they pass that level, and when the J curve triggers, that's the time when they report huge profits. So for Ixigo, again, A, market means addressable market is huge. B, their focus is on the next billion consumers. So the people, they started with train and then bus. So clients or customers who are focused, means who are using their service for train or bus, when they aspire to move on to air, again, it's a natural call for them to get onto the Ixigo platform. So I think they have a long runway to go, and addressable market is huge. So I think overall, if you take another 5 years view, then obviously there's a huge upside still available. But again, if you look at the shorter term, perhaps it is pricing the current fundamentals.
Another stock that's up 80% this year. Since we were on the subject of new age IPOs, Nikunj, is also delivery in your holdings. All of these new age IPOs, they've made their lows, they've rebounded from their lows. Delivery, unfortunately, is not one of those names. Still continues to hover below its IPO price. In fact, its post-listing high also happens to be its IPO price, which is 487. Do you see over a longer period of time that the street will eventually begin to value the stock that you believe that it deserves?
Yeah, so again, see, in delivery also, if you look at the business model, I think they saw some setback when Miso decided to go inward for their courier service logistics business. But again, if you look at the current acquisition, what they've done, the industry is consolidating, because loss-making new age companies, if they don't get fund, then it becomes difficult for them to survive. So we see a possibility of consolidation in the logistics space and e-com parcel space. And if you look at the cost structure of delivery, I don't think anyone else can meet that kind of a cost structure for the e-com parcels or for the other services that they are offering. So I think they are now at the point where you will start seeing the fundamentals picking up and numbers reflecting that. So I think another 2 years I would give to delivery, and we'll see a good kind of a J curve coming into their earnings as well.
All right, so you're bullish on some of these new age stocks or digital names, so to say. It was a pleasure speaking with you. You have a lot more stocks to talk about, but that for some other time. Thank you so much for joining in today with your thoughts and the outlook on these names. But auto stocks, they continue to be in the spotlight. The companies have slashed prices following the GST rate cut. Let's go across to Sudarshan, standing by the big wall to put the price cuts into perspective. Sudarshan.
So August 15, Independence Day, and PM Modi's speech from the rampart of Red Fort announced a big GST reform after 8 years of its implementation and called it double Diwali bonus. And that triggered a big move in auto names. Since then, that is August 15, auto index is up 11%, and most of the leading names from TVS, Hero, Maruti to M&M have seen a move somewhere in the range of 11 to 17%. Fast forward to September 3. GST Council held a meeting considering proposals related to GST reforms. And its unanimous decision, Council has approved all the proposals as expected. And that led to what came as a big surprise was that Council decided to implement those GST reforms from September 2022. Now, that has helped most companies basically saved most companies from what it could have been a washout festive season. And in resultant, here comes a big price cut for everything we use to commute, no matter it's an entry vehicle or the luxury car. The prices have gone for a major revision from as low as of rupees 30,000 to as high as almost rupees 9 lakh. Let's start with Mahindra & Mahindra. It has announced price cut up to rupees 1.56 lakh and has already come into effect on September 6. The Bolero price drops from rupees 10.52 lakh to rupees 9.25 lakh, a reduction of almost rupees 1.30 lakh. The Scorpio is now rupees 1.45 lakh cheaper, and the Thar Rocks sees a cut of almost rupees 1.33 lakh. And its flagship XUV 700 price is now down by almost rupees 1.43 lakh. Next in the list is Tata Motors. It has taken a price cut for both its passenger vehicles and commercial vehicles, and that would be effective September 22. In passenger vehicles, prices have been cut by up to almost rupees 1.55 lakh, and the Nexon is cheaper by rupees 1.55 lakh, Safari by rupees 1.45 lakh, the Punch by rupees 85,000, and the entry vehicle, that is Tigor, by rupees 80,000. In commercial vehicles, reductions are even steeper. Heavy trucks are cheaper by up to rupees 4.65 lakh, buses and vans by as much as rupees 4.35 lakh, and small CVs and pickups prices have been reduced by up to rupees 1.10 lakh. And if you are planning to buy Creta, Venue or i20, take a look at the price cut announced by Hyundai. Prices have dropped by as much as rupees 2.40 lakh. The i20 price is now rupees 98,000 cheaper. The Venue price has dropped by rupees 1.23 lakh. The Creta sees a reduction of almost rupees 72,000, Alcazar by rupees 75,000, and Tucson by as much as rupees 2.40 lakh. Even luxury car makers have joined all these companies and have aligned their prices with the new GST regime. Audi has slashed prices by up to rupees 7.80 lakh, BMW has announced reductions of as much as rupees 8.90 lakh, and Mercedes-Benz has cut prices across its portfolio ranging from rupees 2.60 lakh to as much as 11 lakh rupees. So what next? The big question is, will the industry see a revival in demand? That is, we'll have to wait and watch.
We'll keep on waiting and watching for that if there is a revival in demand, of course, especially considering the festive season is on the corner. Sudarshan, thank you for that detailed analysis of what gets cheaper when it comes to cars. Take a short break. On the other side, we put the spotlight on SPEL Semiconductors in our special segment, Under the Lens. Welcome back onto our special segment, Under the Lens. Sonal has hopped across to the wall and she is putting the lens on a stock called SPEL Semiconductors, Sonal.
Yes, SPEL Semiconductor, the stock has been on a tear of the bosses. The stock has rallied 100% in just 1 month and it soared 72% in the last 5 trading sessions alone. But you know, does the surge match the fundamentals? Let's take a closer look now. What's happening here? SPEL is engaged in semiconductor assembly and testing. Its business covers wafer sorting, assembly, testing, and drop services for integrated circuit chips. But financials tell a sobering story. In Q1 FY26, revenue stood at 1.93 crore. That's it, a sharp fall compared to 8 crores that we saw in FY25 and 12 crores in FY24. Operating performance remains under pressure with an EBITDA loss of 0.5 crores in Q1 against a loss of 6 crores last year. And at the bottom line, losses continue to widen. Just look at that screen. 5.5 crores in Q1 compared to 21 crores in FY25 and 17 crores in FY24. Key ratios raise a red flag as well. Debt to equity surged to 2.4, which indicated a sharp increase in leverage. Debt service coverage ratio remains negative at 3.81, which means earnings are inadequate to cover obligations. Auditors of the company, they have filed a qualified opinion, which basically highlights uncertainty around the company's going concern status, along with inadequate inventory control as well. The company has identified land at Marai Malai Nagar, valued at 30.8 crore for sale, and has already received advances of around 47 crore rupees against sale of capital assets. The company has capital work in progress of around 11.7 lakh for machinery and is eyeing government incentives for assembly, test, mark and packaging units, where the centre promises a 50% subsidy on investments above 50 crores, with Tamil Nadu adding another 25% subsidy. Funding discussions with banks and institutions are underway to leverage these incentives. So this is something which the company plans to do. Now let's talk about shareholding. Promoters hold 59.7% stake. Singapore-based Netronics Semiconductor Technology owns nearly 55% stake. Netronics acquired SPEL in 2014, but not many financial details are available about this company in public domain. The company, however, has not received any government approval under the recent Semicon India program when it actually registered under the scheme, but other big players have received the approval. The company thus has a big promise in its name, but the current financials and status of its operations do not offer the kind of confidence to justify its market capitalization of over 1,000 crore rupees. But can it defy skeptics and spring a surprise? Only time will tell.
As they say in Hindi, the fark between Kathni and Karni. We'll keep an eye out on SPEL Semiconductor. So interesting there. Thank you for that. Call time on this edition of Trading Hour. We leave you with the Nifty, still 70 points higher, above the 24,800 mark. From Sonal and me, thank you for watching. Halftime report on the other side.